shares of Samsara closing sharply lower after reporting earnings results last night here on Overtime. The company beat on the top and bottom lines, but investors a little disappointed in the guidance. And joining us now is Samsara CEO Sanjay Biswas. Sanjay, good to see you. Now, I've been talking to you long enough, since I guess before you went public, to know that you can tend to be a little conservative in the guidance. So 23-24% growth, I think, is where you guided. The bulls were excited for something closer to 30. Fundamentally, is there anything shifting or slowing in the demand you're seeing? How much of your outlook is being safe based on all of the uncertainty and headwinds we see globally?
Well, John, first, thanks for having me on. We do tend to be very conservative with our guidance. That's our philosophy, and that's how we operate. In terms of demand, I think our Q4 results tell a pretty clear story. We saw a record number of 100K plus customers. There's a quarterly record for us. Momentum is really there in the business. We grew on an adjusted revenue basis 36% year over year, which is consistent with where we were in Q3, but at a greater scale. So we're still seeing a lot of great demand for the product. We're in the early innings of digitization for our customers, but we do want to take into account all of the different factors that are going on in the macroeconomy. So we want to be conservative with the guide.
When it comes to potential upside, I wonder how much of it you think comes from some growth areas that we've talked about, like equipment monitoring, expanding, continuing to outside of logistics into areas like construction and the safety possibilities there. If you can give a little color on what you're seeing from that in the quarter and the growth and sort of attach rates of your various offerings within those spaces.
Well, we have seen a tremendous amount of momentum outside of the traditional industries we've served. On the earnings call yesterday, we talked about a top 3 global telecommunications company who have been deploying us. We saw a very large do-it-yourself storage company deploy us, and these are with products that are outside of the traditional portfolio. The asset tags that we talked about last time we were together have been selling really well, thousands of units going out the door. So the use cases, I think, are broadening for us, and we are all about really focusing on the long-term opportunity, which is, again, digitizing the world of physical operations. There's a tremendous appetite for data about what's going on in the field when it comes to safety, when it comes to efficiency, and even very practical areas like fuel consumption, which I think spread across different industry verticals.
Just to dig into that a little bit further, you know, it's interesting. I've had multiple conversations with multiple people within the industrial space in different parts of the industrial space this week, where they're talking about all of that digitization that's happening, whether it's in factory floors or warehouses or vehicles or things tied to the military, for example. And even just yesterday on CNBC, you had the Commerce Secretary, Howard Lutnick, talking about robots coming to factory floors. It does seem like we're at this milestone moment where industrial policy, technology, and companies such as yourself are meeting and converging in a way to create productivity in a way we haven't seen in the past. I want to get your thoughts on that.
It very much feels that way. It seems like we're at a tipping point, and a lot of it is because this is a part of the world that hasn't been digitized yet. If you think about the commercial vehicles on the road, only about half of them have GPS tracking. Only about 10% of them have AI-based safety cameras, and that's a number that is poised to grow. So when we think about our customers, what we see is an opportunity to really help them move forward very quickly on that digitization journey. And for us, that's what we're hearing in the field, is there's a real appetite to get this data, but there's a question of how do you do it?
Sanjay, finally, on the asset tags, frame for me how investors should model net revenue retention impact from that. Do you yet know, are customers maybe buying these for one reason, and then the data that they get you think is going to cause them to laterally move into other or more products? Are they going to be churn reducers, loyalty increasers? What's the impact?
Well, for us, we focus on that kind of long-term customer partnership and that opportunity to really digitize their operations in mass. A lot of that starts with a single project. So they may be focused on safety, or they may be focused on routing efficiency or fuel consumption. We'll help with a project like that. But then, as you said, they may be interested in understanding where all their small assets are and helping improve their efficiency on that front. So for us, it's about planting seeds, building long-term relationships. We've seen our net revenue retention rates continue to be very strong, and we've seen our multi-product attach rates continue to tick up. So in the last quarter, we're seeing about 60% of our 100K plus customers adopt 3 or more products from us. So not just safety, not just the vehicle tracking, but also things like the asset trackers and the workflows and the training. So for us, it again is about this multi-year, decades-long kind of partnership as opposed to landing large. And the asset tags, I think, fit into that philosophy of, well, let's digitize more of your operations over time.